And good morning, everyone. Thank you very much for joining us for today's breakout session on enhancing adaptation planning through risk financing and insurance. As Yannick mentioned, today's event is going to be co-hosted by the Insure Resilience Global Partnership, the Munich Climate Insurance Initiative, and the NAP Global Network. We'll be hearing from country experiences from colleagues from the governments of St. Lucia and Liberia. My name is Christian Ledwell, and I'm the manager of the NAP Global Network. Today's session will focus on the huge potential that climate and disaster risk financing and insurance, or CDRFI, has to play in building resilience at scale, and how national adaptation plans in particular can help scale CDRFI solutions up. Within the broader kind of umbrella of CDRFI, we're hoping to focus especially on insurance. We know that climate-related disasters are threatening development progress and risk exacerbating poverty. By one estimate, climate change could push an additional 132 million people into extreme poverty by 2030. Strengthening climate change adaptation and resilience building mechanisms will be crucial for achieving development goals that ensure sustainable growth in economies and ecosystems, and for improving quality of life. National adaptation plan processes have a key role to play. The national adaptation planning processes that countries are engaging in are driving coordination, setting policy priorities, mobilizing resources, helping allocate support, and helping countries track progress in their efforts to achieve their adaptation goals. To briefly introduce the initiative that I and my colleague Angie work with, the NAP Global Network is an initiative that was created in 2014 to support developing countries in advancing their NAP processes. To achieve this, the network facilitates South-South peer learning and exchange. We work with countries on national level action through technical support, and we share knowledge and good practices on effective NAP processes. The network's members include individual participants from more than 150 countries, and we're funded by bilateral donors, including Canada, Germany, soon Ireland, and now also the United Kingdom and United States. So first on the agenda, we'll have a presentation from my colleague Angie Dazé, who's a senior policy advisor and lead for gender equality with the NAP Global Network Secretariat here at IISD. Angie's work focuses on policy and practice related to climate change adaptation, resilience, and gender equality. And she was recognized for this work recently this year, being included on Apolitical's 100 Most Influential People in Gender Policy list for 2021. Angie, over to you.
Thanks so much, Christian, and good morning, afternoon, and evening, everyone. It's a pleasure to be here today, and I wanted to start by really thanking the INSU Resilience team for the collaboration on this report. It was such a pleasure to work with them. And so I'm just going to share a few of the key findings and recommendations. To start, I just wanted to explain why we thought it was important to look at CDRFI in NAP processes. And Christian has already touched on this, but just to say, it's very clear that CDRFI can play an essential role in climate change adaptation. It's a proactive approach, and it provides predictable and rapid access to resources when climate-related disasters occur. And as Christian mentioned, it involves a range of solutions, including insurance, social protection, and contingency funds, among many others. And so what this means is that CDRFI solutions can enable governments, businesses, and individuals to protect their financial security in the event of shocks. And as well, climate and disaster risk analytics, which is really the data and analysis that's used by CDRFI providers, can help to inform decision-making regarding adaptation and can also incentivize management of risks by quantifying them. At the same time, as Christian mentioned, NAP processes are an essential mechanism for advancing adaptation. These processes will guide investments in adaptation by governments, by the private sector, and by development partners over the coming years. And this means that NAP processes can help to put in place the systems and the capacities that are needed to quickly and effectively scale up CDRFI solutions. Next, please. So I'm just quickly going to explain the methodology for the analysis. We drew on two key sources of information. First, we looked at the 21 NAP documents that had been submitted to the UNFCCC as of the end of March this year. And then we also looked at a sample of 52 NAP readiness proposals that had been submitted to the Green Climate Fund. And this was to give us a better sense of the steps that countries are taking to move their NAP processes forward, whether they've already completed a NAP document or not. We used a systematic review process for both types of documents using keyword searches and reviews of key sections. And our intent was really to identify the trends in the use of climate and disaster risk analytics, as well as incorporation of CDRFI solutions in the documents. We compiled the information to draw out the key findings and then used this as a basis for developing recommendations. So I'm just going to share a few of the top line findings, and I'm going to focus on the findings related to insurance, but just to say that the report looks at the broader suite of CDRFI solutions. So the first finding is that the cost of climate and disaster risks is a factor that's driving adaptation in many countries. 48% of the NAP documents and 42% of the GCF NAP readiness proposals refer to the costs incurred by climate-related disasters. So, for example, St. Lucia's NAP cites the impact of Hurricane Tomás in 2020, which caused over $330 million in damages. And generally speaking, these references to the costs of climate-related disasters are retrospective, so they refer to the costs incurred by disasters in the past. Our next finding is that insurance is the most identified CDRFI solution in NAP documents. So 90% of the NAP documents that we reviewed include some reference to insurance. For example, Sri Lanka and Togo both plan to undertake feasibility assessments for scaling up climate risk insurance. In the GCF readiness proposals, we found references to insurance in 25% of the documents. In one example here, Tajikistan plans to do outreach on the NAP process with local financial institutions and insurance companies as part of its GCF project. We also found that in 81% of the documents that had references to insurance, the reference was among the adaptation priorities or actions identified in the document. So countries prioritized a range of activities, and these include developing new products and schemes to address climate risks and strengthening the institutional capacities of insurance providers. Paraguay, for example, intends to establish a working group to bring together public and private insurance providers to develop new products that address climate risks. And in another example, Suriname plans to put in place insurance schemes to manage the impacts of extreme weather events on health, housing, and infrastructure. Next, please. We also found that more than half of the countries who included insurance in their adaptation plans had a specific focus on managing risks in the agriculture, livestock, and/or fisheries sectors. Chile, for example, foresees the expansion of coverage for agricultural insurance, both in terms of the types of products offered and the population covered. To close, I just wanted to highlight a few key issues for implementation of insurance solutions that help in managing climate risks. The first is the need to enhance collaboration among the range of actors involved. This includes government actors, climate services, insurance providers, and clients to ensure that the products and services are effective in meeting adaptation needs. The second is around the need to increase coverage of insurance, particularly for more vulnerable groups who tend to have the most need, but the least access to insurance products that work for them in adapting to the impacts of climate change. And lastly, related to this, we need to ensure that investments in CDRFI solutions, including insurance, yield equitable benefits for people of all genders and social groups, noting the persistent gender gaps in access to financial services and related types of opportunities. And I will stop there, and I'm really looking forward to hearing from our other speakers. So thank you very much.
Thanks so much, Angie. And I think now to move on to the next section of the program, we're now going to hear from two adaptation experts who are really putting what Angie's just presented in, as the theory, putting it into practice. And we're really lucky now to have joining from St. Lucia and Liberia, our colleagues Kemuel Baptiste and Arthur R.M. Becker. Kemuel serves as the Chief of Extension and Rural Advisory Services with St. Lucia's Ministry of Agriculture, Fisheries, Physical Planning, Natural Resources, and Cooperatives, with responsibility for program planning, implementation, and evaluation, with a complement of 37 members of staff. He's worked with the Ministry of Agriculture since 1991, holds an MSc in Rural Development from Imperial College of Science, Technology, and Medicine in London. Mr. R.M. Becker, Arthur R.M. Becker is a project officer for multilateral environmental agreements with Liberia's Environmental Protection Agency. He is Liberia's national focal point for the Capacity Building Initiative for Transparency, the Partnership on Transparency in the Paris Agreement, and the Global Fuel Economy Initiative. I'll be asking the same question to both colleagues to provide a 5-minute overview in response to the following question. So I'll pass first to Kemuel, and just to say huge thanks to colleagues for joining in this very busy run-up to both COP26, and especially to Kemuel for joining from your vacation at a very early time in the morning in St. Lucia. But Kemuel, my question for you is, what's the biggest challenge that you've faced in using insurance as an adaptation strategy in St. Lucia? The floor is yours.
Good morning again, Christian, and good morning, colleagues who are participating in this morning's, today's forum. I'm really glad to have the opportunity to share with you our St. Lucia experience. Just by way of starting off, Christian and IISD have been huge partners with us in developing our national adaptation plans, and of course the various sectoral adaptation strategies. And for us, we've developed those for agriculture, fisheries, water, and a few other sectors within the economy. In terms of the response to the question, the biggest challenge that we've faced in using insurance as an adaptive measure, the information I'm sharing with you is majorly anecdotal. After I spoke with Christian about it, I have had conversations with some of my staff at the Department of Agriculture and our Sustainable Department to do an actual investigation in the form of a survey to get some more realistic data in terms of people's reactions and responses. So the information I'm sharing with you is pretty much anecdotal. So based on our past experiences, one of the biggest challenges, I think, would be the associated cost, and running really closely with that is that there's support that is provided at the national level from governments in terms of recovery efforts. That itself presents a challenge for persons pursuing insurance as an adaptive strategy, because if there are going to be handouts and support each time you have major disasters, it sort of nullifies the need to purchase insurance. So for example, in 1994, we had this huge storm called Storm Debbie with huge amounts of land slippage, flooding. There was support provided for recovery. In 2010, we had Hurricane Thomas, and a repeat of 1994, massive land slippage, loss of life, loss of livelihoods, flooding, and some wind damage. And then you had support provided again from friendly governments, national governments. And then we introduced the Caribbean Catastrophe Risk Insurance Facility, popularly known as the CRIF, that is supported by UNHC and a few other agencies. And in 2013, government purchased some of the packages that were being offered, and we had a disaster December 24th, 2013, Again, a huge amount of floods, land slippage, loss of life, and governments were able to secure somewhere in the range of about $6 million East Caribbean dollars that was used for recovery efforts. And then just recently in June, end of June, I think, we had Hurricane Elsa, and Hurricane Elsa left us with about 35 million East Caribbean dollars in damages. And as part of the recovery effort, governments put in a small amount of money, about $5 million, that is currently being used to help farmers to find restoration of their livelihoods. Why do I think the price is prohibitive and is closely linked to support being provided by the public purse? We've had the CRIF offer this insurance package, and we just have not gotten much buy-in terms of small farmers. Now, our agriculture sector is mainly composed of a large number, perhaps up to about 4,000 persons in farming, but the farm sizes range in size majorly less than half an hectare. So in terms of acres, most of our small farms here are just about 1.5 acres, which is just about half an hectare. And so for them, it's sort of prohibitive to, or doesn't make sense to purchase insurance policies. The other challenge that it presents in terms of what is being purchased is that the suppliers of insurance always provide coverage for one event. So for example, the product that is being offered under the Livelihoods Protection Program looks at majorly floods. This approach uses a grid system where you purchase a package or a risk package within a particular grid. The trigger is a certain amount of rainfall within a specified time frame. And when that trigger is arrived at, for example, in 2013, then the payment is made. The challenge with that particular package is that because of the mountainous terrain of this country, you often find that you have the larger portion of rainfall in the interior parts of the country. The farmers are located in the meandering areas of these waterways. So you have the trigger in one grid, but the damage is being experienced in another grid. And so the people who are experiencing the damage in terms of flash floods and so on may not necessarily be provided with coverage. Then you have other agencies. Just by way of a little bit of history though, which I was sharing with Christian earlier, in the early days when we had a major banana production program, and it was done jointly with 4 islands, St. Lucia, St. Vincent, Dominica, and Grenada. We had a crop insurance that was referred to as wind crop. The way it happened, there was a small deduction made at the point of sale that went towards insurance. And when you had wind damage, which was a major challenge for bananas, then a payment was out. Yes? Hello? Okay, somebody's mic is...
Hello?
Chris, your mic is muted.
Hi, how are you?
Chris?
Hi, how are you?
I'm good. Your mic needs to be muted. I'm making a presentation at this time. Thank you. And so the policies that are being offered usually targets just one event. It's either flood, storm. At the present stance, there is no policy package that offers coverage against drought, for example. And so that presents its own challenge. So a farmer purchases a flood package and he gets wind damage, no coverage. He purchases a wind package, he gets flood damage, no coverage. He does not purchase drought packages, and we have had major drought problems in 2009. Up to last year, we had some agricultural drought, and we do not find coverage. So I'm saying all this to say that the money being spent by the farmer is not perceived as valuable expenditure, because he's probably paying for something that he feels or she feels may not provide in the sort of coverage that is required. And so what needs to happen is a couple things, I believe. Just like we had in the banana days, we need to be able to restore our cooperative arrangements. Cooperatives have not worked really well in our part of the world. They keep flopping, they keep shutting down, they keep falling apart. But it's one of those ways to get the numbers that are required. One will easily understand that it's a challenge for the service providers to provide lower cost things because you have a smaller population. I believe that the cooperative idea will be able to help to resolve that problem, like it did in the case of bananas, where we had a large number of producers from several small territories, small island developing states, the Eastern Caribbean states, and they were able to get a really good package. I think one of the ways to reduce that cost is to perhaps have regional cooperatives, if that is practical, to ensure that there's a greater negotiating power on the part of the small farmers. So for me, it's about the cost associated, the coverage that is provided, causes or requires the farmer to make a purchase of several packages. So he requires to purchase a package for wind, flood, drought, and at the end of the day, most of this risk that is purchased has a time frame. So it's generally for 1 year. So if for a particular year none of these things happen, then he has to go back at the following year and purchase it again. And so we all now need to be working with those farmers to see what the mechanisms are to reduce this cost by bringing them together. But a very important aspect as well is to ensure that we continue to advocate to shift the knowledge, attitudes, and practice of our small farmers and help them to come to recognize the amount of resources that is being placed from friendly governments, from international donors, and of course from the national purse. Whenever we have disasters and there is a need for a recovery effort, we need to be able to document those adequately and share it with the public so that they have an appreciation of what is required in terms of recovery efforts. Because you're looking, for example, at Hurricane Elsa, $35 million in damages, and the public purse is only able to provide $5 million in recovery. That's way below what is required for effective recovery. So we need to use these kinds of experiences, perhaps, and interact with the farming public, the agricultural communities to try to advocate and encourage persons to purchase these facilities. Because after all, there are some facilities, but it's not acquiring the sort of attraction that we would like it to acquire. Governments are making the purchases. So for example, in 2013, the government of St. Lucia made a purchase of those packages from the CRIF, and that sort of paid out. But it's difficult for the public purse to continually take on that burden, and so our biggest challenge, I think, is the associated cost, and that cost is a result of small numbers. You don't have the sort of large numbers that you have. Then you have each one of the packages or each one of the events have a different associated cost. Then you have weak farmer producer cooperatives that minimize their ability to negotiate a better package, a better cost structure. So I think if we are able to navigate through these, we should be able to get a more effective solution. And hopefully the service providers, if we are able to increase the numbers who are purchasing the packages, we'll be able to offer a better pricing structure to help farmers or to draw farmers into making the purchase on the insurance product. So I think that's about what I want to share in terms of what I think, like I said, in terms of the St. Lucia situation, what will be the biggest challenge for us at this time in terms of getting attraction of farmers to purchasing insurance in the case of or as an adaptation strategy to adapt to issues of floods, droughts, pestilence, wind damage, and so on. Yeah. I'm going to stop off here for now, and hopefully you guys have some questions that I could ask, that I could respond to later on. in terms of more detailed information on our experiences. Yeah.
Thanks so much, Kemuel, and really rich experiences there. Quite a lot of kind of different ways of approaching the conversation, but really hoping to dive into some of those questions. And thanks so much for that presentation. We'll now pass to our colleagues in the Environmental Protection Agency of Liberia, and Arthur Becker is on the line. And so I would ask to Arthur the same question I asked to Kemuel, which is, what is the biggest challenge that you've faced on using insurance as an adaptation strategy in Liberia? The floor is yours. Thank you very much. And Arthur, I believe we're not currently getting your audio. Can you hear us okay?
Exactly, Arthur. I'll just show the screen. Can you see the unmute button at the bottom of your screen? If you can see that, that should be where you can unmute yourself, and if you like, you could turn your video on as well. If you don't see these buttons, you might try to join again, or also to accept cookies in your browser. I can see you've changed your status now, or maybe rejoined. So hoping this might work any second.
Great. Well, just while we wait for
Okay.
hi.
Am I clearer now?
Yes, loud and clear.
Okay. Okay, folks. Thanks so much. Let me extend sincere thanks and appreciation to the NAP Global Network for providing us this opportunity to make this presentation on behalf of Liberia. Again, as Christian initially said, we are quite busy at the moment preparing ourselves to participate in the climate change negotiations at COP26. However, we think we are obligated to participate in an annual forum so that also using people who presented the case of St. Lucia. For Liberia, we've prepared some tips that we'll to speak to in terms of what we were charged with to speak about during this deliberation. First and foremost, let me begin by saying that Liberia, as a least developed country, is very tight domestically with its budget, or little or no limited allocation towards climate adaptation. Additionally, when it comes to public budget or the national budget, it does not specifically allocate resources to some climate or disaster risk financing. So there is a challenge that we would like to highlight at this forum. Additionally, the impacts associated with climate and disaster risks are most often mitigated through ad hoc interventions, through the resource mobilization, normally as part of emergency response from donors, international partners, and government agencies in instances where there are climate risks and disasters, where the National Disaster Management Agency of Liberia comes in. But it is also good to note that the private sector has also been dormant in this process for a long while, but they are now beginning to acquire knowledge and capacity to understand the issues of climate risks and the impacts that it comes to bear with the investments at hand. And let me hasten to say that the private sector, through the just updated national determined contributions of Liberia, there was a standard dialogue that brought together the private sector. One positive outcome out of the private sector dialogue was the constitution of the Liberia Private Sector Climate Change Alliance, which is now a full embodiment of government interventions, especially when it comes to climate risks, impacts, investments, and other climate-related interventions. So we will gradually begin to see ourselves having the private sector moving towards having the requisite knowledge and all having the requisite capacity to understand the issues of climate risks and the impacts that do with investment associated. However, the private sector in Liberia is challenged with limited resources to support climate change adaptation or financing of risks against disaster or climate change. Existing insurance schemes in Liberia do not have products that insures against climate or disaster risks either. There's a need to build the capacity of the private sector to assess climate finance, including grants and loans that positions the private sector to support climate change adaptation, including the development of products to support the risks associated with financing. And let me also state here that through the National Adaptation advisory product that will help enhance mobilization of climate finance, and which by extension will also help scale up climate and disaster risk financing and insurance. This will also facilitate the capacity that is direly needed to develop pipeline and bankable products. Liberia, quite recently, beyond the submission of its updated nationally determined contributions, has also been able to develop an NDC financing strategy, which will help scale up climate and disaster risk finance, and also insurance leveraging corporations and companies are insured against loss and damages associated with issues like fire and flood, etc. But vulnerable populations are often not able to afford or not covered by these insurance schemes that can mitigate loss and damage from coastal erosion to storms to flooding, and either to agricultural yield, especially against the benchmark of crop losses. So at this point in time, I will want to stop thus far. I hope I did not go above the time limit, but I decided to share the experiences from the Liberian context. Thank you so much, Christian, and thank you to the rest of the colleagues also following.
Thanks so much, and again, really, really helpful and really rich experience there on how Liberia is now using the National Adaptation Plan as well as the NDC investment framework to really scale up these types of CDRFI solutions. And so now I would like to open the floor to others in the room to have a virtual discussion, what we call a virtual knowledge clinic. And this has been a popular event when we've been able to convene in person, and hopefully we'll be able to again. But this is, we're hoping to have a discussion that will be an opportunity for peers to share your experience across countries, especially to respond to those challenges that we just heard from colleagues in St. Lucia and Liberia. And the objective here is really to promote peer-to-peer support when it comes to tackling real world problems. And so I might begin by asking Kemuel, if you would like to respond to Liberia's experience that has just been shared, or vice versa. Arthur, if there were any points in St. Lucia's experience that you really wanted to speak to in terms of types of multi-hazard insurance, or perhaps on ways of encouraging uptake of insurance policies by stakeholders. And so I'll pass the floor, and then maybe we can open it more broadly to others participating in the breakout room today.
So thank you, Christian. Like Arthur rightly said, when you operate in small island developing states or least developed countries, the challenges are very intense in terms of getting insurance coverage. And he mentioned the issue of leveraging, and the insurance providers do have the leverage, but the challenge is the associated risk. In utilizing that leverage that they have, there's huge risk in terms of the possibility of returns. After all, these service providers are in there for profit. They're not necessarily the sort of non-return on development investments. And so even if they are willing to provide the leverage that may be required to provide the facilities, it's usually prohibitive for the service providers because of the associated risks. As I was sharing with Christian a little while back, at one point in time, fishermen could not get coverage for their boats and their boat engines because the easiest thing to do was to go out to sea and just dump it somewhere. And so after that happened a few times, the insurance companies just outright refused to provide that sort of coverage. So it's good to know that that the facilities are there, but it will be interesting to find out, how other countries that are represented here are faring when it comes to helping the service providers to optimize the returns on the leveraging capabilities and make the packages more attractive. Yeah.
Thanks, Kemuel. And Arthur, would you like to have an opportunity to take the floor again, perhaps to speak to that issue of how do you take advantage of that leverage? And you'd mentioned Liberia has established a private sector alliance. Have you had any success so far in kind of getting that buy-in from the private sector, or in particular CDRFI providers, to align what they are offering with your National Adaptation Plan goals? I believe there may be just an issue with the audio at the moment, but I might take the opportunity then to open it up to the floor to respond to that question that Kemuel's just raised about how do you really take advantage of that leverage from insurance providers, especially in a context where where you have established this as a National Adaptation Plan objective. And so who would like to take the floor? I think we'll stay in this room rather than go into a breakout room, but please feel free to either raise your hand, or I think we're a group that can perhaps just respond. Feel free to jump right in if you'd like. And also feel free to yeah, turn on your camera, but who would like to kind of break the ice by taking the floor first?
Hi, Christian. This is Viktoria.
All right, thanks.
Hey. So I think the question was around how to leverage, I think, action from the private sector when climate risk insurance is included in national adaptation planning or official policy documents, as far as I understand, right? Yeah. I mean, I think this is an important and great question. I mean, certainly looking at the provision of climate finance and looking at what is provided for adaptation finance and having that in programmatic documents such as NAPs and specifically NDCs does help. I think with regards to mobilizing action from the private insurance industry, and the point is very important, right? It's service providers that are looking at a certain profit or bottom line. But what we should do is, or what one should do, it depends on the size of the insurance company, is to look at larger portfolio risks, right, that they are facing. Yes, insure agricultural farmers for climate risk may not be the one line that offers profits, but if your client segment consists or is large, if you have a large client segment that comes from the farming industry, you as an insurer have also to anticipate that the uptake of other insurance products that you're offering for that industry, whether it be other business risks, is also at risk if that client segment is threatened, their income is threatened by climate risks. So taking a more strategic and a portfolio perspective on the side of the insurer of what climate risk means for their portfolio beyond climate risk insurance, but for their entire client portfolio, may also be a means to incentivize investment or action from the private sector in that regard. And then obviously when we are looking at finance or at access finance, we did have, I think, and we did see an important decision yesterday or 2 days ago coming from the high-level consultative group of Inch Resilience, specifically on designing principles for premium support, premium capitalization support for insurance, which is specifically looking at this issue where the startup costs, for example, to set up insurance schemes in countries where we have constrained resources, and not necessarily the markets that would be very, well, let's say, easy to build on for insurers, to give access to capitalization support and support those startup costs for the insurance industry to incentivize action. And these principles are also linked, to try and incentivize another element that has been raised by Mr. Baptiste, which is the fact that oftentimes we only have single product offerings, right? So for a farmer or for a micro, small, and medium-sized enterprise, having protection only for drought, only for flood, doesn't necessarily help, and you're not able or not willing to spend money on that, even though you may be able to. And in addition to that, what we see in the context of MSMEs, for example, is that there are other risks than climate change that are a higher priority when it comes to, for example, health, business interruption, or theft. So looking at bundling different types of insurance products or different types of coverage is one thing that should be undertaken by the insurance industry. And the principles that I've just mentioned for premium capital support are also supposed to support and incentivize specifically those kind of products that add a higher value for the end beneficiary in the end. So I know I've been jumping quite a bit, but in terms of mobilizing finance, if I have to break it, or mobilizing action from the insurance industry, if I had to break it down or summarize 2 points, I would say, for one, there needs to be a business interest by the insurer. And I think that can be incentivized by taking this portfolio perspective instead of just focusing on climate risk and climate risk insurance products. And secondly, by really trying to, well, capitalize on and follow up on these discussions that have happened under the HSEG when it comes to the kind of products you want to design and the support that would be required for that. And with that, I think back to you, Christian. I'm happy to. stop.
Please, no, please stay on, and I'd love to hear Kemuel's response, and especially, I guess, what do you see, Viktoria, as the national government, or if you're sitting in Ministry of Agriculture, how can you help encourage the insurance industry to take that approach?
That question for me or for Mr. Baptiste? Sorry.
Yeah, I was trying to figure that one out.
Sorry, but no, I'll pass to you, Kemuel, to respond. Sorry, I'm editorializing. Yeah, but
yeah. Yes, thanks, Viktoria, for sharing those thoughts. While you were speaking, I was framing a question in my mind that I would throw out there. If anyone has experience in exactly what you've proposed, where you provide a more holistic coverage. I'm not sure in small island developing, in least developed countries and so on, how much emphasis is placed on other products like life insurances and property insurances and so on. It will be interesting to find out whether any other country has service providers that present to the beneficiary a sort of a full package that covers a wider portfolio of risks, as you rightly said, in the hope of attracting more buyers into purchasing this risk products. Where the St. Lucia situation is concerned, like I said earlier on, it's still a huge challenge for us to bring those packages together. Insurances have outright refused to sort of do that. And we mentioned drought, flood, and wind, but there are other areas we didn't even speak about, like you rightly said, theft and pest and disease, and some other areas that are really critical to farmers. We have huge problems of predial larceny, which is theft of agricultural produce. In fact, we have a predial larceny unit that is comprised of trained police sort of personnel. And the problem persists. How do you provide coverage where that is concerned? And so these opportunities are there for us to investigate and bring on private sector. One of the ways that we've navigated in this part of the world is governments go in and sort of subsidize some of these offerings. So that which the private sector is offering, governments would generally reduce, taxation or reduce stamp duties or some small fees to try to reduce the cost associated with it and give an opportunity for the service provider to experience a measure of profitability. But ultimately, there has still been very little drawdown in terms of purchasing these packages. Yeah. So it will be interesting if anyone in the forum has any experience in country or otherwise as to this bundling of the risk coverage, if it has been done and how has it been working out at all, if any.
Thanks very much. The floor is open for anyone who'd like to share an experience on that bundling approach.
So, I mean, I would very much like to share experience on that. However, I can't at this stage, personally or from an institutional perspective. But what we have been working on the MCRI end, together with the V20 Secretariat, which is the secretariat to support the V20 group, 48 ministers of finance from 48 climate vulnerable countries, is the V20-led Sustainable Insurance Facility, which is a facility to enhance the product development or climate smart insurance product development for micro, small, and medium-sized enterprises, with a specific focus. One of the action areas that we defined for that facility to focus on bundled insurance products when it comes to different types of coverage, but when it also comes to bundling with other financial instruments, credit, savings, and I'm sure Mr. Baptiste is more, or is definitely familiar with those kind of products. And this facility will be launched by the V20 at COP, and then from there, the first implementation step is currently already underway in the Philippines, with future countries being in Southeast Asia, as well as the African continent, and I think Latin America and the Caribbean are also envisioned, to gain exactly that experience when it comes to bundling different types of products. So I think in a year from now, we should definitely be at some point where we can share some experiences, or the facility should be at some point where experience can be shared. That being said, I think I do remember that there was a product, I don't know whether it's still running, offered by clients in the Philippines back then for the owners of sari-sari stores, which are kiosk-like convenience stores all across the Philippines, which offered products or protection from typhoon risks. And they linked that protection, I think, if I remember correctly, also to personal injury. And I'm happy to look into that and look that up and share that information afterwards. I just don't have it on the tip of my tongue right now.
Great. Well, that's really helpful, and thanks for sharing that. We'll look forward to hearing more about the launch, Viktoria. And I think I'm not sure. I think Arthur may have had to drop off, but I did want to ask Kemuel. He raised the issue of national budgets and identifying funds within national budgets. And when we spoke, you had mentioned that under the wing crop facility, when bananas were which was treating on bananas as an export crop, you had mentioned for each kilo of bananas sold, some cents were set aside. And this was, I believe, managed by the Banana Growers Association. But could you speak to that experience, and did that help kind of build in some budget for insurance policies, or what was the experience there from St. Lucia's side?
So the St. Lucia Banana Growers Association, and of course, by extension, the Windward Island Bananas Growers Association was sort of sub-regional. So you had the ECS countries, the Eastern Caribbean states that were involved in the production of bananas for export, produced, and it was managed. There was joint research and development, there was joint marketing, there was joint shipping, and joint procurement of supplies for that particular industry. And what it allowed was for just wind coverage, by the way. The wind crop, as it suggested, was majorly related to wind damage. So anytime you had a storm of sorts, that facility provided coverage for persons who experienced damages. So yes, at the point of sale, I think it was just about 2 cents or so per kilogram, and the farmers were earning somewhere in the range of about maybe 75 to 80 cents Eastern Caribbean dollars per kilogram at the time. And a small deduction of 2 cents or so was being made. And that provided sufficient resources to help those persons who suffered loss during wind events. But in more recent disasters, well, not recent, but going back to 2010, the challenge was no longer just wind damage. You had this land slippage, huge land slippage. You also had excessive flood, and what was happening with the flood was the standing waters in banana fields would cause sort of latent losses that emerged maybe a couple months later on, and that was not covered by that particular facility. So the public purse still now needed to find resources, and usually the efforts were driven, by central government seeking assistance from friendly governments, or in some cases, donor agencies globally who understood our plight. But how long can we sustain that is anybody's question. And in the current environment, the sustainability of that seems very uncertain. And as we speak, I know the various sectors, for agriculture, for example, does not necessarily have a budgetary line, an annual budget that says this is to cover risk in the case of disasters or climate change adaptation. So there's always the first to get resources to help us either to recover or to move forward. So in response to the question, it worked back then, and nobody felt it. The farmer never even really felt the deductions. But now, if you were to ask farmers to go make the payments themselves, another area that we have not even been able to get farmers to purchase is the issue of life insurance, or not life insurance, but retirement coverage. We have the National Insurance Agency in St. Lucia, where all employees make contributions. The farmers, they've been self-employed. There's been very little contribution from farmers, and these folk get to the 70s and the 80s, and other small business people, they get into the 60s and 70s, and they're retired now, and there's nothing for them to fall back on. And so all of these are questions that we need to try to navigate in terms of adapting in this environment. Yeah.
Thanks very much, and I guess just with an eye on the time, I just wanted to pass the floor back to Arthur, if you would like to come back to respond to any of the points that Kemuel has just raised, or more broadly, if anyone else would like to share one comment before we come to an end of this session. Yannick, please.
Thanks, Christian. Don't want to take the floor from anybody else, but yeah, I did think this was quite a rich discussion, and a few of the points mentioned resonate quite well with the work we're undertaking here at the Inter-Resilience Secretariat as well. So I just wanted to flag those, and some have been touched upon. So one thing is the point around bundling. That is super interesting, both in terms of bundling different kind of insurance products, but also bundling insurance with other risk reduction or risk management interventions. And so, as some of you might know, we have this platform of sectoral communities, as we call them, that look at exactly these issues on integrated approaches to building resilience and the bundling of the different steps in different sectors. And one of these communities focuses on the agricultural sector specifically. There was a repeated mention of farmers, crop insurance today. So that's certainly a place to take that conversation further, and we invite you and to join those discussions. Another point that came up here today was on government subsidies and more generally speaking, the affordability issue of insurance products, and also the need for external support and sort of resource mobilization challenges. And as mentioned by Viktoria, in what we think of as a landmark decision, the Inter-Resilience High-Level Consultative Group just approved a set of principles on what smart premium and capital support could look like. And that policy note, including those principles, is just being released, made publicly available today. So we'll share the link to that as well. That's it from my side, and back to you, Christian.
Great. Thanks so much, Yannick. And before we wrap up, Kemuel, were there any last reflections you'd like to share? And Sarah, I think you may be on mute.
There we go. Thank you. Yeah, I was just saying thank you guys for the opportunity to share our local experiences. The issue is very real. Even as we speak, for example, we have serious haze in the country, Sahara haze over, and it's causing huge amounts of problems, both in terms of agricultural production, but also health and wellness. How do you cover things like that? Because the labor part of small businesses is as important as everything else. And then you need to find opportunities to cover these kinds of incidences. And so for me, it would be good if there are other persons on the platforms. And I mean, I know we didn't get much in terms of commentary from other participants, but if these shared experiences could be placed out there so that we don't necessarily have to reinvent the wheel in terms of finding plausible and workable solutions to challenges that we're currently facing. Because if we keep experiencing millions, hundreds of millions in disaster damages, and then we're only getting a small percentage in it really over time is going to cause huge discouragements in terms of persons pursuing their livelihoods, because how do you recover from these disasters? How do you adjust yourself? And so we really need to ensure that we support the government in ensuring that persons have adequate coverage, and the private sector can effectively participate and, of course, obtain their own objectives of some measure of benefit from being part of this process. So again, thank you, Christian, for this opportunity. I'm looking forward perhaps to other conversations where there's new and exciting programs, as I think it was the other colleague who just spoke on a while ago. There are new products that are emerging coming out of COP26, I think. So we hopefully, when these products come out, there'll be the trickle down to small island territories like ours and other least developed countries. Yeah, thank you, Christian.
Thank you so much. No, it's been really, really appreciated, and no, the issues raised are really immense, and so I hope that this isn't the end of the conversation. To wrap us up, I would like to now pass to Viktoria Seifert, who you've heard from, who is the manager of the Disaster Risk Finance and Policy unit at the Munich Climate Insurance Initiative, leading the institution's technical advisory group to the B20 group of ministers of finance. Viktoria, over to you.
Thank you very much, Christian, and also thank you, Mr. Baptiste and Mr. Becker, and of course, Angie, for providing all the inputs today. I mean, it was a small session, but I very much enjoyed hearing the perspective, specifically the sort of in-depth experiences from St. Lucia. Just to very quickly sort of jump on one of the points I mentioned earlier, with regards to the bundled insurance product, the one that I have been mentioned does exist. It's not offered by Climbs, as I said initially, but by CARD in the Philippines, and it covers personal accident, funeral, and disaster costs for typhoons, floods, and earthquakes, as an example of experiences that may be looked into going forward. I don't want to keep us for too long in terms of wrapping up. I think one of the key messages that we really heard here today is that we need to work on products that offer value add to the beneficiaries that are supposed to take them up. And that includes the bundle solutions that we have sort of discussed, and includes more experience on that and working on that, moving from where we started with regards to paying attention to climate risk in the insurance business, but actually now going to where we can add value and how we do that, how we scale up. I think in addition to that, what also comes, and I think this has been mentioned by Mr. Baptiste as well, is to enhance the understanding and access to advisory services when it comes to risk reduction investments, right? And how to, in addition to insurance and making sure that insurance isn't taken as a resilience measure alone, can be implemented, and how this can be done in an integrated way. So how we can effectively integrate disaster risk finance, specifically insurance, with other resilience actions and resilience interventions. And I think in this context, something that we haven't dwelled upon much today, risk analytics play an important role. And I think looking at how insurance or disaster risk finance can add and also bolster national adaptation planning in the context of NAPs, but also in the context of NDCs, is that there is currently a big push in the disaster risk finance space, also supported by the private sector and the insurance industry, to enhance open access to data and risk analytics, and to enhance sharing of those metrics and of those findings across the board, to help understand risks, understand them at a local and more granular level, and to then also use that understanding to actually cost effectively plan and combine resilience investments and disaster risk finance. And I think this is an important point that I would also like to raise in this context today. And then I think maybe the last message that I would want to add, which we didn't have the time to spend much time on, but we heard that being mentioned in the context of Mr. Becker from Liberia, is to also think about disaster risk finance not only in the context of NAPs when it comes to national adaptation planning, but also in the context of nationally determined contributions, which sort of offer a perspective on mitigation as well. And the reason why I'm bringing this up is that we don't only need integrated thinking for adaptation investments and disaster risk finance, we also need integrated thinking on mitigation and adaptation. And the reason why I'm mentioning that is that for many climate vulnerable countries, adaptation investments are obviously a priority, right? But we need mitigation investments as well, because we all, given the fact that the time is running out, we all sort of need to jump together to transitioning towards net zero, which is also, I mean, basically the best risk management option that we have. And in this context, again, risk analytics and disaster risk finance, I think, can offer an important perspective of how to combine resilience investments with adaptation investments, resilience investments with mitigation investments. If we think about nature-based solutions and the benefits they have in terms of resilience, as well as carbon sequestration, if we think about decentralized renewable energy systems and the benefits they also have in terms of resilience when it comes to shocks or disasters that, well, affect at the moment stationary energy installations, I do think we can take a more systematic perspective that looks at those challenges together with risk analytics and insurance and risk finance playing an important role. And I think this is how we should go into COP next week. I very much enjoyed the conversations today, and back to you, Christian, I guess, to provide us with the final remarks of today's session.
Thanks so much. I think we just, the plenary has just begun, so I think we actually have to come to a rather abrupt close, but just to say thank you so much for everyone who joined and for a really great discussion. Hope we can continue this outside of this session, and wish you a great rest of the forum. Thank you very much again.
Thank you.